We need to move on to our next segment, Wrap the Week. And every Friday, what we like to do is use the Mindful Investor Live chart list, look at how these charts have evolved week to week. And again, now we're at month end, so let's pay attention to the long-term trends. As a reminder, if you've not used this before, if you go to your dashboard, go to your chart list on your dashboard. At the bottom of all your chart lists, there's a little button that says Manage Chart Packs. You can get to all the different chart packs that me and a lot of the other hosts look at. For this particular one, though, an easier way to do it is go to the articles page, go to my blog, which is the Mindful Investor. There's a link right at the top to copy it to your login. We're going to start with what I call the market trend model. This is something I've been using for a number of years. It uses weekly data, and I basically have a simple rules-based system. Long-term, medium-term, short-term are these signals telling me bullish or bearish, and they're all based on PPO, which is related to the MACD indicator. It's using the moving averages, exponential moving averages, to see how these trends have evolved. The 21-week exponential average remains below the 34-week exponential average, which is why on the long-term basis, it's still bearish. And that really is meant to recognize more of the longer-term secular trend. It's been negative since mid-March. That was after the big sell-off there. And that's why overall I still, it still seems to me relatively limited upside relative to the potential downside. I think we still would need to spend some more time before that turns more positive. The medium-term indicator is based on the weekly PPO, which turned positive first week in May, remains positive, sort of acknowledging this uptrend. And again, right where we're testing the S&P 3000 level. Short-term has been bullish since sort of the end of March when it turned positive, and that's recognizing that big initial thrust out of the low. So the read from looking at this chart still remains short-term bullish. Tactical has been bullish for a little while. Medium-term now turning bullish as well in the last couple of weeks. The long-term trend's still negative. And that, to be honest, that's about how things feel here. There's still so much of an argument to be made for backing and filling, for retesting, not the lows. I think that's less and less likely, but getting down and retesting some of these ranges in the 2,700 S&P, if not a little lower, I think is still reasonable and will still fit into a long-term transition period. The daily chart we talked about, and again, what I have for a while been sort of saying bear market rally. I think, we're nearing an end. We continue to go higher. So again, as a trend follower, I have to acknowledge that this has been an uptrend. That's why the model being positive on the short term and medium term makes sense to me, and I'm okay with that. And I certainly have seen these opportunities for the market to turn lower have resolved to the upside. Until we stop making higher highs and higher lows, you have to acknowledge that the short term, that tactical trend remains positive. We have now broken above that S&P 3000 level, which I've talked about, the RSI above 60. So this is showing the characteristics of a bull market phase on that cyclical time frame. And I think you have to acknowledge that's where it is. There are lines in the sand that if we start breaking lower, I think you could suggest more of a rotation down. But at this point, I feel pretty comfortable being more on the long side than the short side for sure. When we're looking at breadth, that's one of the things we've talked about, the changing breadth characteristics. Some of the questions a little later are going to be related to breadth, but in particular, the cumulative advanced decline lines have now broken back positive in some cases, and I think this is really important. Out of the four that I'm looking at, the mid-cap index, I'm probably going to flip more to a greenish color because it's broken above its swing high from the end of April. If you notice, and this is not updated for today's close quite yet, so I'll see over the weekend how this looks, but I would want to see each of these break above their swing highs. We've not seen it yet with small caps, not seen it yet with large caps, and also not seen it yet with the overall broad New York Stock Exchange. When that would happen, I would sort of color code these greens, suggesting a move to new swing highs. I'm pretty comfortable with the mid-cap index suggesting that. But, they're at key levels, which is interesting as, again, stocks in the technology sector and others sort of testing those huge resistance levels. We haven't seen a ton of new highs yet. We're seeing a token amount, but again, the average stock is still within this range. I think charts like KLAC, I keep mentioning because they're stocks that topped out earlier this year, have now round tripped after selling off in February to March, have now come back and are retesting those highs. You need to see stocks like that breaking to new highs, which would push these green bars higher, showing you more 52-week highs on the New York Stock Exchange and in the S&P. We haven't seen enough of those yet to really say it's an all clear sign we're going higher. That's what I would want to see on that particular chart. This one we talked about a lot with my guest Ryan Dietrich yesterday, and with other guests this week. So I don't want to beat this one too much, but overall we have gone from 0% of the S&P above their 50-day to over 90%. That's actually pretty common for the beginning of broader bull markets. And most of the time, what Ryan was showing us yesterday is that almost every time 12 months later, the market's been higher in that configuration. So certainly speaks to the internal strength of so many stocks recovering their 50-day moving average. We talked about sentiment earlier, so I'm not going to hit it too much. With ratios, I'll just touch on a couple of these. With consumer, we've seen this rotation to consumer discretionary from consumer staples. That trend still remains relatively positive, pull back a little bit at the end of the week, but overall still leaning more towards discretionary, which makes sense. Semiconductors, near a new relative high, but not making it yet. Teased it about a week and a half ago and now has pulled back a little bit, but overall the trend remains positive. I'd want to see that continue to remain strong. I think one of the more key ratios to pay attention to is this one, small caps versus large. This has been such a relative underperformer, right? In general, owning mega cap over small cap has been the trade for a while. That all has changed since the market bottom. Small caps have been outperforming, and that's starting to actually gain some steam. Some of the days this week, you really saw an upthrust in small caps. Did not happen today. You saw small caps pull back a little bit while large caps finished in the green. But I think this is a trend to really pay attention to, because I think a lot of people have gotten very comfortable owning those big mega cap names. If this continues to change, you're going to hurt yourself if you're not getting a little further down the cap tiers and looking, especially screening for opportunities down in the lower end. And then finally, this is another one I want to hit on, growth versus value. And again, I've had questions about the end of the growth trade and the reemergence of value so many times, and the trend continues positive. So I've been hurt before by this ratio. I'm hesitant to tell you that it's changing. This pullback looks really similar to the pullbacks we had in March and in April. But again, if we make a lower high, which is what we've not really been able to do, we keep reversing higher. If we get a lower high and continue this trend downward, maybe this breaks below the 50-day average for the ratio, I think that would be a really important one, because a lot of people, I think, mentally have written off value as well for a very good reason. But if that changes, you want to pay attention to it. We're going to take a quick commercial break, back actually sharing with you something that's happened in the world of Bitcoin you probably don't know about, and you probably should. We'll be back in a minute.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.